following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 15th magnificent Monday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is off to a great start of their day. Let's make sure we do everything we can to squeeze everything out of all of this magnificent, magical Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. That's what we're going to do today. We're going to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We'll go make heads or tails out of the market. I'm absolutely grateful for your presence here today. I'm here to serve you. So we'll get right to it. But you can call in as well at 877-927-6648. Of course, internationally, 727-445-1044. This is Magical Monday. Of course, it's TFNN. I'm Steve Rhodes. Welcome to the show. We're going to go straight up to one of my favorite cities, Tallahassee, to Ben. Ben, thanks for calling. Thanks for holding. How you doing this afternoon?
Great, Steve. How you doing?
Excellent. Thanks so much for asking. Russell 2000 is off 3 points, and you're calling about the IWM. Tell me what you're doing, how I can help you.
Well, first of all, I just wanted to say kudos to a great call back in November.
Oh, thank you. Thank you.
I think you were the only one that said it's not going to hit the October lows.
I still am in that camp, I believe.
Yeah. Hey, good job. So you
Thank
think
you.
hey, based on this morning, IWM still a buy, or what are your thoughts?
Well, in markets that are going to form significant tops, the Russell 2000 does not take the lead position. So the market's moving down. The Russell 2000 is your point. Now let's just take a look at the IWM first, then I'll show you a couple of show you one cool trick out here. But as we take a look at the IWM, here's what we know about it at this stage of the game. The April 15th, the swing point is its high thus far, and there were 37 million shares up there. And the IWM came into that swing point with 42 million shares on June 10th. So price has been moving up into a swing point with volume, the top of which has not been tested, 127.13. Friday's action, it closed above the bottom of that swing point at 125.92. You know, so the IWM is just really dealing with the resistance area up at that upper level swing point. The IWM has basically, it's only, it's not that far off of its all-time highs out here. So typical markets, Ben, if the market has made a significant top, the IWM would not be trying to make new highs out here. That's not how it works. Now, the proof of that is the Russell 2000 is a measure of the small caps. And what you and I can do is we can take a look at the small caps versus the Russell 1000, the large caps out there. In light of the fact, so here's the question. Is the market selling off because of grease problems? Is it selling off because of major debt margin problems? Is it selling off because of interest rates hike out here? Well, look, if it's going to sell off because of an interest rate hike, the Russell 2000 is not going to outperform the 1000 because there's going to be fear, because who's going to get damaged the most, who's going to get hurt the most is going to be the small caps. The bottom portion of my chart, if you're watching this on TigerTV, is the spread, or is the correlation between the Russell 2000 and the Russell 1000. All you got to do is just divide the 2000 by the 1000, just simply to come up with a ratio. What I can tell you is that this ratio is rising. This is moving higher. This broke a little bit of a descending trend channel. It's a red diagonal line going across my screen. It's just another confirmation for both you and I that the Russell 2000 wants to move higher. So you're saying, hey, is Russell 2000 still a buy out here? I don't know that I recommend that you buy the IWM just at this stage. As soon as the market does put in the bottom, I would say you'd want to have some money allocated to the IWM. But the IWM, and we take a look at that correlation also on my screen, there's a couple of moving averages. There's a fast and a slow moving average. I won't get into those at this stage, but they are in absolute bullish formation out here. This is not typical behavior of a market that has found an all-time high. That's why I have said, that's why I still say to date, that this market is going to move higher in through the July timeframe, middle of July. Whether it takes out its highs or not, I can't be 100% certain of it. I believe the Russell 2000 will. And I don't see any reason why the NASDAQ Composite won't do the same thing. And we'll see what happens with the New York Stock Exchange. So does that help answer, your thoughts about the IWM?
Yeah, well, I guess if you think there's still a bull market, why this morning you didn't see as a buy?
I did not see a signal. Here's the other deal with regard to this morning. There's one thing that I do know, and that is at the price point of 2,084, where, if you listen to Friday's show, I said, hey, if the market opens up Sunday evening and the futures are able to push down to the 2,084 level and they hold, that was the buy. And this morning when price and the ES Mini pushed down below that, I'm not certain that this is the last push down this week.
Yeah. Well, if I'm looking at this as a three buy kind of deal, I'm willing to sacrifice a few points down to make sure I'm hitting the trend on the way up.
I hear you. Here's the other thing right now. So here's another element. So we took a look at the Russell 2000. So I wanted to share with you that it's not just my feeling, it's just not my belief about when I make the statement that the markets want to move higher out here. It's really with regard to what's normal behavior, what is bullish formation patterns out here, what typically occurs inside markets. Now anything, as you know, can happen at 114. It's 113 right now. But what you and I have to do is go with what we've got. And so you certainly can take a stab and buy some of these dips out here. There has been, I would say this, if you're an aggressive trader, that's what you do. Plain and simple. If you're a little bit more of a conservative trader, and since we're up near these highs, and since the market ought to move higher in through the middle of July, and we're only at July 15th, so we're looking at about a 3 to 4 week cycle to the upside. Then what you could actually do is wait for these price oscillators. That's what we're looking at right now to really get above the 0 point. Yeah. So I just think you've got the VIX index, which is above the 50-day exponential moving average. Right now today it's only up 9.5%. If it were going to be above 10% at the end of the day, which it may be, that would tell you we'd get a bounce tonight, tomorrow morning, tomorrow afternoon, something like that.
What's your? I guess if you're positive on the market through mid-July, what's your target price on the S&P to put a strong trigger on the buy side?
Strong trigger on the buy side in the S&P 500. What we would do is we would take a look at, first let's just take a look at the long-term chart on the S&P 500 and see what took place here this morning. So as we take a look at a weekly chart for the S&P 500, which is right now trading out at 2,086, it's very possible that this morning when price got down in the 2,076 area, that was a buy point, an ideal buy point. Quite frankly, it's about...
Didn't it go down to 2071 something?
Oh, I'm sure that it did. Yeah, it did. It went the S&P itself. It looks like the low was 2072.49.
Oh, you were looking at
the ES Mini maybe was 2071. But the S&P cash, the low so far, as I see it here, is 2072.49. And 2076.50 happens to be a level of support on a monthly chart. If we were taking a look at the monthly, I'm taking a look at the weekly right now. So this is a spot. 2076 is a spot of support. If this level fails, meaning we see a close below 2076 on a weekly basis, I would then say, Ben, that price ought to move down to about 2034. Just to give you an idea. The trend is still to the upside. There's nothing wrong with the market if that's what it in fact does out there.
So you're looking at a bull market through July, but yet a possible low all the way down to 2034.
No, you're asking me some potential buy points.
Okay.
I don't know that the market will get down to that level. But if you're asking me for ideal buy points, I just take a look at the longer term chart to figure out where that might be.
Well, where I'm coming with all these questions is, you made an incredible call back in November, and I never forgot that. That was awesome. And then you've been very optimistic the last couple of weeks, and I tell you, if your call is right over the next month, that's pretty amazing. 2 for 2 when everybody else is bearish is great. And I saw a dip pretty steep this morning. I was incredibly tempted to buy because of Steve Rhodes.
Well, look, I will tell you that what took place this morning, if this chart right here, and I'll show this onto my screen to you, if this had actually held support this morning, and it may by the end of the day, and this is the daily chart for the NQ, then I would say that this morning was the buy. And the chart that I'm showing on my screen right now, it's a shorter-term rising price channel. And price this morning is still trading just below that level. But the candle that is forming at 1:17 p.m. is a hammer candle. I don't know what it's going to look like at 5:15. I just need to wait to see. But if we're this close to what could be a bottom, I would prefer to see some type of bullish reversal signal. The problem is that we could have two opposing candle sessions. We could have a hammer candle by the end of the day and a gap down, which took place, overnight. Both one would be bearish, one would be bullish out here. But the trend is still in place inside of the NASDAQ. I think that I think that the sentiment out there across the board is on the bearish side. A listener sent me an email over the weekend. I can't recall which sentiment indicator it was, but it indicated that about 80% of the surveyed money managers or whatever segment it was, I believe it was 80%, they were on the bearish side of the trade out there. So you've got a lot of people that are afraid. So that's a good thing. To me, that's more of a bullish outcome than a bearish one. Ben, it's not me so much as I know it will sound like me that is bullish, and I'm the one that's doing the show, so how could you not say that it's me? But I really do believe, I'm just taking a look at chart patterns out here, that in the past have meant something. That chart that we took a look at between what the small caps and the large caps are doing out there, to ignore that would, for my part, knowing it and to ignore it would be something I would never do. And I would never, therefore, suggest anybody else do that as well. I'd never ask you to do something that I wouldn't do. The euro-Japanese yen, which is the currency pair that's the absolute carry trade inside the markets, until that correlation breaks, it's something that you and I have to absolutely pay attention to. The euro-Japanese yen has been on the rise ever since a bottom out here back in the middle of May. Eventually, the market's going to correct and it's going to hop on board on that same directional standpoint. So looks like we're going to break out there. I hope that helps you out.
No, I appreciate it. I think the Greece thing is going to be just an Ebola scare. They'll figure it out. The market's going to fly.
There you go. Thanks so much for calling. That was Sam. That was Sam in Tallahassee. This is Steve with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 105, S&P's down 8, Composites off about 22 points, Russell's down 3 points. Let's take a look. I've got a cool chart here for gold. We're going to take a look at that maybe when we come into this next break. After this is a short segment, 5 minutes here. So let's just go take a look at the index ETFs, get a feel for what kind of message might be coming out of those. And we're going to start off by taking a look at the QQQ series. Now, the Qs right now are dealing with the May 6th swing point. It's a swing point. It's got 42 million shares. The top of that swing point is 107.95. The first time down to this level was back on June 9th. 27 million shares going against 42 million shares in the QQQ series. So I think I laid out my strategy for you with regard to the message of what the IWM is communicating to you and I. Russell 2000 is crushing, outperforming the Russell 1000. Small caps outperforming the large caps in light of potential rising interest rates. The market does not want to stay down for long. Just does not. It wants to move on to higher territory. As far as being able to bust out the lows, if you take a look at today's volume, 21 million shares, fairly decent. It does not appear to me, even if we straight line the math, that we're going to see the QQQ series get more than 42 million shares. And today it's also tested May 6th out here. 42 million shares, the top of which, again, is 107.95. You're trading 108.12. I don't know where the market's going to close at the end of the day. I don't know at 4 p.m. is it going to be. Here's the deal. if it's above 107.95, you're going to have 2 tests of a swing point within the past 5 days, 2, 4, 5 days out here with lighter volume. You're going to have a rejection on price and volume to the downside inside the QQQs. What does that say? It says if you can't bust them down, the market will try to go ahead and bust them to the upside out here. The Qs have not fallen apart. I don't believe that they will fall apart out here. The IWM, we've already covered that, so no reason for us to spend time there. Let's take a look at the SPYs. What do we have going on inside of the SPYs? Now, the SPYs are not as equivocal, because they're trading with inside the May 6th swing point. The top of that's 209.93. You're at 208.19. Volume there was 135 million shares. What both you and I know is that volume is going to be light today. It's got 72 million so far versus 135. Last time down in here was 105 million shares. That was on June the 9th. The SPYs are not giving any type of clear signal to you or I. They're just simply not doing it. The only signal we have inside the SPYs is similar when Ben was on during the first hour. We looked at the NQ. We looked at the daily futures contract. Well, here's the ES daily contract out here. And if you take a look at those blue diagonal lines on my screen from lower left to upper right, you're going to see a rising price channel. And guess what? Price tested the bottom of that price channel this morning, and it failed to break below it. You're trading right now at 2,084. It looks like here, 2,084. You're trading really right on the number that, in my opinion, this is opinion. It's more my opinion than fact here, but I can back it up with facts. You got to see it close above 2,084 in order to stay bullish inside of the SPY, inside the S&P 500. It hasn't broken the trend, that's for sure. It's just simply tested. Now, where will the market bounce to? You know, until it breaks through this little subcorrection price channel, this little descending, the red lines, diagonal lines on my screen out here, we're still in that chop, chop, fizz, fizz. No, it's not a relief. But in the case of the SPYs, you've got to really go to the futures contract, in my opinion, to get the signal as to what it is doing out there. Let's go check out the Dow Diamonds, see what they're doing. You've got the Dow pulling back today. Volume so far, 3.5 million shares. It's also dealing with the May 6th swing point. Did it test? Oh, it did. Son of a gun. Maybe a good gun out here. The bottom of that May 6th swing point is 177.25. There were 7 million shares, 7.5 million to be exact, or close to exact. The first test on June 9th was with 4.7 million. You're at 3.5. I doubt that the diamonds are going to get twice the volume that they have now. Which would need more than twice the volume in order to tell us that it really. So you're going to get another. Well, as long as it closes above 177.25, as long as the DIA, the diamonds, close above that, you're going to get another rejection of a swing point at the bottom of a swing point with light volume. Another rejection of a swing point. You can't bust them down. What's the market going to do? It's going to go bust them up. Now, in the case of the Dow Diamonds, what does that mean? It means really you want to close above your TAS market profile low, 178.11. As long as you see that today, then you'd have a double repo. Not really a double repo, but a double reversal, so to speak. And that says that price ought to at least make a run for the 181.29 area. So you've got the Qs testing a swing point, the top of which on light volume. You've got the diamonds testing the bottom of a swing point on light volume. The SPYs, we got to go to the ES Mini. That's held support. And the IWM, the Russell 2000 itself, outperforming the large caps, the Russell 1000 out there. Folks, that's not the makeup of a market that wants to crush down lower. I can't control what it's going to do next. I can tell you that that's not the makeup of markets that want to go careening to the downside. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is off 114. S&P is off 10. Composites off 23. Had a email and asked me the question, if I believe that the markets are going to go up through July. July what? July 16th is a date you can go ahead and mark on your calendar as when the market makes its top. Now, we're just going to use that as a date. Maybe it takes place a couple days before that. Maybe it's a couple days afterwards. But right now, July 16th is the date that Stevie is going with. Now, I mentioned, as you know, we've talked about, well, every show host talks about gold. And for a while, I've been talking about gold being priced in euros. And I said, I can't show you that. I can't show you that on my chart. Man, was I stupid. Of course I can show you that on the chart. It just didn't dawn on me until late this morning where I'm like, wait a minute. I can actually show gold priced in euros on my chart. And that's the bottom portion of my screen out there. So excuse me on that little lack of judgment out here. Now, the top portion, and my theory has been, when we saw gold break out, that the movement in the breakout that I'm referring to is the one that took place back here right around January 5th. So coming on into the beginning of the year out here. And it was, I mean, I had done some math, and a couple of folks had provided me with some charts with regard to gold priced in euros. And this the bottom portion of my screen out here, there's really two lines. There's several lines out here. The two lines I'm going to talk about first are the blue horizontal line, priced at about €1,000, €1,000, 998.70 is what shows up on my screen out here. And it was the breakout of, so my opinion was that gold is a fear trade out here, right? So the fear that's really going on inside the marketplace, I believe that the fear that's going on inside the marketplace has more to do with what's going on in the Eurozone than it does with anything else going on here in the U.S. And the thought process was that as soon as a level of support or resistance breaks, all traders that are watching on their screens are paying attention to that, and that's where you can get that pile-on effect. Well, in this case here, we actually saw the euro break through that 998 or the 1,000 euro level. And this was back on January 5th. And what happened? Price just simply continued moving higher. And where price ran into resistance, interestingly enough, was the resistance of the price of gold marked in U.S. dollars. That's coming up from this high out here back in August of 2013 as my trend line. You're going to use basically the March 17th level. But that, in essence, held gold in check out here. So we got really, sets of traders taking a look at gold priced in different currencies out here. Now, what I also find of interest is that in the case of gold, we can see that it has not broken its trend line at all. The trend coming back to that high back here in August of 2013, gold's only come up to test that level of that trend. If we take a look at that same trend line inside of gold priced in euros, that actual trend line was broken back here in June of 2014. You know what happens when a trend gets broken? Ideally, what you like to see, you have to have a lot of patience for this. You like to see price come back and test that trend line and prove to you that it doesn't want to get inside the old trend by rejecting it. And that's exactly what gold did priced in euros out here. Gold came back and tested that trend line that it broke out of back here right around the June 20th time frame back in 2014, came back and tested that trend line back here in November 2014. That actually put in a nice bottom inside of gold priced in dollars, interestingly enough. So I believe that for you and I right now, in order to really get a decent gauge as to what's going on inside of gold, I think for us to only look at it in terms of, now I haven't made any of this stuff up. Those of you that have been longtime listeners know that I've been talking to you about gold priced in euros. It just took me, what it should have taken me 2 seconds to figure out. I should have been able to figure it out much sooner than waiting till today. But anyways, I figured out how to do that, just kind of hit myself upside my head with that 2x4 board out there. Things happen for us, not to us. In any event, right, so where does that leave us? Here's my thinking. The horizontal line, that blue line, that 1,000 euros, 998, somewhere right around there, price is broken above that. We can kind of see gold really coming back into that level. It's probably not until we get to that 998 level where we see if gold, in fact, priced in euros can hold that support line. And if it does, then maybe you're just setting up a trading range, from the 998 level up into the 1158. And we'll continue. So now that I've got this out here, we'll continue to go ahead and take a look at Goldilocks, priced in both euros and dollars, see what patterns are out there and see which ones actually work for us. And maybe the combination of the two as we are identifying here. Now, I suggest that the gold price in euros is probably going to pull back just as gold price in U.S. dollars hasn't broken that trend. Maybe a short-term bottom could be one thing, but a breakout area, nah, I'm just not seeing it. I'm not buying it. And we'll go ahead and take a look at continue to watch gold priced in euros. So hopefully that helps you out as well. Maybe you can make that kind of adjustment on your charts as well. Let's go take a look at currency pairs. Since we were talking about gold, we were talking about currency. Let's take a look. I know we've got John in Sarasota. He was taking a look at going short the euro against the U.S. dollar. We took a look at that, I believe, Thursday or Friday, and the suggestion was just not so fast, not just yet out here. And this is what's kind of interesting, too, with the so-called fear of whatever may or may not occur over in Europe with regard to Greece out here. The euro is still holding in the top of its TAS market profile. Its resistance level that has now changed to a support area. So you've got to see the euro get down below the 112.25 area before an old level of resistance, or now I won't say too old, it's only been about 5 or 6 trading sessions, until you start to see some kind of a failure out there. Otherwise, the euro ought to at least make its way back up to this little shooting star that it has not been able to take out. That was a trading session from June 4th, 113.80. If you get a close above that, price then moves up to the next swing point to the upside. That's the May 15th high, and that's up at 114.66. Any close above that, you then start to see A to B equals CDs to the upside inside of the euro. I am not saying that that is what is going to take place out here, but the euro has not cracked, which is really kind of interesting when you start to consider what is or is not going on over in Europe with regard to Greece out there. With regard to the Great British Pound, let's go take a look at it. It's up a little bit here this afternoon. It too is above its TAS market profile resistance area, 1.5534. That says that the Great British Pound wants to go make a run for its highs out here from May 14th in the 158 level. If we take a look at the Japanese yen, trade out at 123.45 out here. What is it doing? Holding support at its TAS market profile low, right in the 123.40, what is it, to give you the exact number, 123.29 level. This says price likely runs up to 124.61. So that covers the currency pairs. That covers gold, at least the way that you and I want to go ahead and take a look at Goldilocks. Silver's up 27 cents. Let's go see what's going on in the world of silver out here. I didn't finish the chart. Take a look at the CFTC COT data, so I won't comment on that. But I did, as of the prior week, I don't recall there being any significant change. And that being said, commercial traders are positioning themselves for silver to move downtown. That says that silver would get down and test that March 11th level and probably take it out. And that's a low of 15.31. But you've got a fairly nice session here today. But until it gets above, let's say, 16.30, it's really not doing a whole heck of a lot, and that is in the case of silver. So we've covered silver. We've covered Goldilocks. Let's just take a look at light sweet crude, get a feel for what it is doing. I believe light sweet crude, I'm now in the camp that light sweet crude is getting ready to take off topside once again. I don't know what it is that's going to, what the cause behind that is, whether it's even related to the U.S. dollar or anything else. At this stage here, well, light sweet crude made a nice run up into this May 6th level, which was 63.62. The real proof that gold is going to go ahead and make another run, and that run equivalent is, let's just take a look at it's going to be your A to B equals CD in essence pattern out here. So let's go ahead and take a look. If I am correct on what I believe light sweet crude is attempting to do, not overnight, we're going to see light sweet crude up around the $73 level. The confirmation of that will come when we see light sweet crude get above 63.62. Now is not the trade. The trade is when light sweet crude touches about the 57.40 area. That's the potential trade out there. You don't want to see it close below 56.51. If you do that, that could actually set up an A to B equals CD to the downside as the next buy. But short of that occurring out here, it may be when light sweet crude gets to about 57.40. But the key is going to be it's got to take out 63.62 in order to make that price projection of $72.67 out there. So that's what's going on inside the currency pairs, inside of the commodities. We took a look at the ETF structures. We took a look at, we started taking a look, we quickly mentioned the summation index, the price oscillators out here. even though the price oscillators are down below zero, the Dow's down around a level where it can see a significant bounce. At least it has during 2015. If we go take a look at it in 2015 so far, let's see. Where are we at? We start down here. You know, the price oscillator can get below the -2.5 level. It did back here in January, both at the 5th and the 15th. It did back here in March. Early part of March, middle part of March out here. And then we saw that big bounce a couple of trading sessions ago as that reading got down to a -2.26 or -2.19 as we speak right now. The Dow getting into the oversold level of its price oscillator out here, slightly taking out the low from June the 8th out there. That's a bullish area. Here's your Morningstar candle out here, big Morningstar candle. And that says the Dow ought to have support at the 17,715 level. Thus far, that level of support has held. If that area fails, I don't know if I were to give you a price projection, I would do this. I would take a look at retracements coming off of this swing down here from January 30th. Up to this high out here, that would say 17,549. Maybe that would become the target. What's interesting, the Dow hasn't even been able, even off of that low from February, major bottom, by the way, in the February, end of January, early February timeframe out here, Dow hasn't even been able to make a 0.618 retracement level out there. I'm not pulling for it to do that, but if it, but it hasn't even done that. It hasn't even made normal retracement levels in order to suggest that there's something maybe more serious going on. New York Stock Exchange actually is, doing pretty well out here. Now, it did not make a lower low this morning, but you take a look at this oscillator reading out here. It's been able to push its way down there, and we've got a little bit of a rising bottom pattern inside of that oscillator. Tomorrow, the next day, you get back above zero. That was a signal that, okay, time to run into that July 16th time frame out there. Until we see the price oscillator go above zero, we don't have a message. We don't have a clear message out here. And, that's where you got to take a look at, as I was speaking with Ben, we were just discussing, hey, was this morning the buy out there? And the ES Mini, the answer was yes. The ES Mini, the absolute answer was yes out here. Price held the bottom of that trend line. Now we just need to see it close above 2,084. You're 2,083 right now. So that says, not so fast out here. You got to be somewhat careful. The VIX index, as I mentioned, it's trading right now. It's up 11%. So it's up 11% on the day. $1.56. You close here around $1. You close around 15.30 or higher. It says the market's going to go ahead and bounce within the next 48 hours, most likely tomorrow out there. If it closes, I don't know, maybe around 15.20, then maybe that's not the case. Let me see, what was the actual low today? If it closes anywhere below 14.91, you don't have to have a bounce. If you get, around this 15.20 or higher, says that the bounce is in order inside of the S&P 500. Let's take a look at some things here that are moving in the marketplace this afternoon. Let's take a look at Netflix. That's off $12. It's down about 2%. Is there any big deal out here? Netflix had the opportunity to create a island reversal pattern, I believe. That has been taken off of the plate. The high was 649 from June the 9th out here. This morning we saw it open at 650. And the intra-session high has been, let's see, 651.57. Your low, I take that back. There is an island out here. There is an island inside of Netflix. A little bit of an island reversal at all-time highs. So this is something to pay attention to. Thanks for asking me to take a look at it. But what we're looking at is there was a little bit of a gap that took place between June 9th and June 10th. High on June 9th, 649. Low on June 10th, 652. The actual high today has only been 651.57 with a gap down. So this is your island top reversal inside of Netflix. If that holds today, if it does hold today, that's got to make you say, something to think about. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 125. S&P is off 11. Had a request to go take a look at the wheat futures contract. I knew sorry, I was just multitasking there. So if we take a look at it, this is the July contract trading out right now at 488.20. And the best thing that I can say in taking a look at this is there's a slight little rising price channel that is formed off of these lows out here. The low being May the 5th. Now you've got some bullish configuration that are down here at the lows. You had this nice little bullish reversal signal on May 6th. We had a nice little sign of strength that took place here on May 14th. You saw another nice little bullish session out here on June 1st. So in this area, you definitely at this stage of the game, you've got buyers, you've got the bulls that are trying to defend this territory. Now, with the pullback that's going on here today, looks like there's maybe a little bit further for it to go into the bottom of this rising price channel. I would say if you see a break below this, what you want to do is you want to see the current contract for wheat hold this May 5th. The July contract for wheat hold this 450 level. But at this stage here, you've just got a little bit of a rising price channel, and that's my current view on that. Looks like Tom was mentioning something about a pop and then a drop inside the ES Mini. So let's go take a look at that, see what we're looking at here. And that's this current 5-minute. This is a 10-minute bar that we're on right now. So this 10-minute bar does not end for another 4 minutes out here. But if we take a look at it, we see that the price had pushed up into 2,088. You're trading off at 2,083 now 2,082 as we speak right now. But volume-wise, you're doing 8,700 contracts in the first 4.5 minutes or so versus the breakout of today's trading range. Today's opening range was between 2,071 and 2,080. I was pretty surprised to see that 2,080 level fail. Nonetheless, that it did, but not just that it did. There was some decent volume, 15,000 contracts to the upside. So this little pullback that we've got going on right here is actually pulling back with light volume compared to that breakout of that trading range, today's trading range, that little boundary between 2,071 and 2,080. Nonetheless, you get back inside today's opening range, 2,080. You can do a deeper retracement, but for the pop to the downside, the pop to the upside out here, no volume on the way down. That's the 10-minute chart. Let's just quickly put on the 5-minute chart and see if there's any type of different volume pattern out there. And on the 5-minute chart here, that's where all of the volume was. And the question becomes, because it pushed up to newer highs, was it actually pushing higher with volume? Because it most certainly was not pushing lower with volume. It did not get to a new low out there. So this says that 2,088 gets tested one more time. So as far as today's action, you still got the sellers that are in control. There's no question about it. But price is up against levels of support. We'll see if those levels of support hold. The market wants to move higher into the middle of July. Whether that is the beginning was today, whether it's tomorrow, whether it's Wednesday, Thursday, that much I can't tell you just yet. If I could, I absolutely would. What I can tell you is stay tuned, because our man David White, he'll be up next in just about 6-7 minutes. So that lovable, squeezably soft David White, he'll be up next. It is Magnificent Monday. That means after that we've got the Tom O'Brien Show from 3 to 5. So thanks so much for joining me, folks. Dow's off 115. S&P is down 10. Have a magical Monday, and I'll look forward to seeing you sometime soon. Take care, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.